Good morning, everyone. Today is 26th of December, and I'm Shuchi Runta presenting Monday's morning market update. The month of December started with a bang with Nifty at its highest level of 18,887, post which the index has been making lower tops and bottoms and corrected approximately 6% from its top. We were in this belief that it's a routine bull market correction till 18,400 and 18,100 levels were strong. But the ease at which these important levels were taken off last week has changed the entire setup. The markets had a free fall since last two trading sessions, with the COVID scare returning back in the markets. Technically speaking, the index structure on the daily charts has been damaged, with moving averages sloping down and with a negative crossover. The pattern breakout which we saw at 18,100 levels on the weekly charts is now negated. Currently, looking at the momentum indicators and the market breadth studies, the markets are extremely oversold. India VIX levels have increased over 16% last week. 18,100 will now act as the resistance. Talking of lower levels, yes, since the trend is down, break of Friday's low will drag the index eventually to 17,550 and 17,300 levels eventually. Bank Nifty, who has been a steady outperformer throughout the bullish rally, is also under pressure and the daily chart trend has changed. 40,700 and 39,900 are the two important levels which the index can gradually test. The point we would like to highlight is that the fall which we have seen last week was spread across all sectors and changing the setup completely. The exception here was the pharma sector. The mid cap and the small cap index has seen the maximum hits, with stocks losing around 15 to 20% over the last week. Talking about international markets, the magnitude of fall which was seen in India last week was not experienced by any of the markets in the world. 32,500 to 600 is an important zone for Dow Jones and 3750 for S&P 500. So if these levels are challenged, India will face the repercussions at an accelerated pace. Dollar index continues to trade at 104 levels. No major change seen there. To conclude, the current trend is in the favor of bears and it's a sell on rise markets. We expect the underlying volatility to increase further, hence, leveraged positions can be kept light and strict risk management should be done for every trade. Levels for the day: Nifty supports will be seen at 17,780 and 17,650. Resistance 18,050 and 18,100. For Bank Nifty, support will be seen at 41,600 and 4850. Resistance 42,200 and 42,600. Thank you.